Welcome back everyone. Today I'm going over 5 altcoins that I would be buying if I only had $1,000 and wanted to get it to over $30,000. Let's jump straight in. The strategy we're going to be using is investing in 2 moderately low risk coins and 3 higher risk coins. So this is how it's going to work out. We have $1,000 total. We're going to put $200 into 3 coins and $300 into 2 coins. The $300 coins are going to be slightly lower risk, hence why we're putting more in, and the higher risk coins are going to be $200 each. Now, because we're attempting a massive 30x in such a short period of time, we're going to have to take on a lot more risk. Regardless, it's why I've created this diversified portfolio consisting of coins in all different narratives, and so here is the plan. The first project is in the real world asset narrative, and it is none other than GFI or Goldfinch. Now, Goldfinch allows for crypto credit borrowing, but instead of crypto collateral, the loans are backed and collateralized off the chain. That essentially means you can borrow USDC and collateralize your income or other assets like a property you own, for example. There's 3 key roles that go into the Goldfinch's network, and those are the investors, backers, and liquidity providers. The investors, these are the people who provide USDC, which is a type of digital currency, to Goldfinch. They can use their funds to help borrowers get the money that they need. Then we have the backers. They look at different borrower pools, which are groups of loans, and they choose which ones to fund with their own money. They get higher returns, but they do take on a much higher risk. Then we have the liquidity providers. They spread their money across many borrower pools to reduce risk. Their money helps cover losses in the pools if needed. Then we have the 3 different types of stakeholders. Now, these are the members, borrowers, and auditors. The members, these are the people who give capital and Goldfinch's token, the GFI, to support the growth and safety of the network. They receive rewards for their contributions. Then the borrowers, these are the individuals or companies that need money. They set up borrower pools, which are like contracts that outline the terms of their loans, such as interest rates and how they will pay their money back. Finally, we have the auditors, which are probably one of the most important roles in the Goldfinch network. Their job is to check on borrowers and to make sure that they are trustworthy before they are allowed to receive investments. Auditors are chosen randomly by the system and are rewarded for their work. Now, here's how the Goldfinch network works. Borrowers are usually businesses that need loans. They suggest the terms for conditions of their loans, which are grouped into something called borrower pools. Then they have the investors. These are people or groups who can provide the money for the borrowers, and they can either invest directly in specific borrower pools as backers or provide money to a general fund known as the senior pool, which then distributes this money across various borrower pools as needed, and this is done through liquidity providers. Then the use of funds comes down to the borrower. The borrower's business takes the cryptocurrency they get, called USDC, and change it into their local currency. Then they use this money to operate and expand their business in their local areas. Next, we move into the Goldfinch's investors. So they've done 5 total funding rounds, and they've received a total of nearly $40 million in funding from 25 investors and 1 lead investor. And you can see here their latest funding round was in 2022. They did a Series A funding round where they raised $25 million. Now, they had various investors, but the main one here was Coinbase Ventures. And again, Coinbase is one of the largest, if not the largest, USA crypto exchange. And this is their venture platform where they invest into various different crypto projects. Then they had a second round. They've done multiple rounds, but their second biggest round was in May of 2021, where they raised nearly $12 million and again a Series A funding round. The biggest investor here, or one of the main investors here, was Balaji. So Balaji is a renowned investor. He's huge in tech, huge in crypto. He's been in the crypto space for a very long time, as you can see here. In 2013, Balaji co-founded 21E6, which later became 21 Incorporated, a Bitcoin mining startup raising over $120 million from investors. The company unfortunately failed as Bitcoin mining businesses and pivoted to become earn.com, which allowed senders to pay users in cryptocurrency to reply to emails. So even though his first initial company failed as a Bitcoin mining startup, Balaji still knows how the crypto space works. You know, people learn best from their failures. Balaji started very early on in 2013, and then after his first failure, he launched a successful company called Earn.com. So Balaji knows how to pivot. He knows how to invest in good crypto projects. He knows the market very well. He knows what's new, what's going to last, and what won't. The third biggest round was a venture series unknown. They raised 1 million in 2021, and again here we see Coinbase Ventures invested again. Now Coinbase invested multiple times out of all of their funding rounds. I think it was only 1 or 2 that they didn't invest in. So Coinbase has been investing in Goldfinch for a very long time, which is a very good sign for holders and people that want to buy into Goldfinch. Now let's take a look at the chart. So over here we have GFI or Goldfinch. Now the main area I'd be looking to buy Goldfinch is in this golden pocket right here, the blue area that I have marked down. We did enter it during the previous dip a week ago or a few weeks ago, depending when you're watching this video. However, this is the main area that I'd want to be buying into. There's 3 main types, you know, really close to current market price right here at around $3.90. It is currently looking like it's dipping. The next area is at around $3.20, and the final area is at around $2.50. Now again, we don't have much to invest here. We only have $200. So it's not really worth us trying to invest $50 here, $50 here, $100 here, because the market could just move up. What we want to try and do is, again, hopefully you have more than $1,000. The key here is to be investing with a tiny bit more, but if you do only have $1,000, then I'd be looking to diversify again. So if we do put, let's say $75 here, $75 here, and $50 here, something like that, to get us the best optimal entry. We have some resistance levels. We peaked at this high right here at around $6.15. So even if you buy, you know, right here, even at current market price, it's still going to be around a 50% move up to the current resistance level, the main resistance level that we have, which is still a very good move. But the main targets we're looking for on GFI, the first target is going to be at around $16.80. You know, the high being here around $17.70, the low at around $15.50. This is the first target. This is a conservative target that I have for Goldfinch. I think it can go much higher. The next target we have is slightly more of a moonshot target. It's around a 10x from the current market price. It's around $37 to $40. This is where I'd be looking to sell most of the GFI. Again, it depends on the market. You know, if you're looking at the other charts and you see Bitcoin peaking, Bitcoin dominance looking like it can bounce, I'd start to look to sell off. But currently, GFI does look really good. So just to clarify, I want to be buying near the current market price right here around $4. DCA, leave some money to DCA at these lower levels if it does go down, and our price targets are going to be $16 to $18 and $38 to $41, let's say. Now the next coin we have is one in the DEX narrative. A DEX is a decentralized exchange, which essentially means there is no central authority like on Binance, Coinbase, etc. Every transaction is peer-to-peer, and it also means there is no KYC. So that coin is none other than JUP, or Jupiter. Here's how JUP works and what it does. So Jupiter is designed to help users find the best trading prices by pooling liquidity from various decentralized exchanges within the Solana ecosystem. This means when you want to trade one cryptocurrency for another, Jupiter will compare different exchanges to find and offer you the lowest possible price with the least slippage. The platform is also known for its user-friendly interface, which is great if you're new to crypto and new to DEXs, because a lot of DEXs can be extremely challenging to use. It makes navigating and trading simpler compared to other decentralized exchanges. Features include direct swaps for immediate trading, limit orders for setting specific prices for trades, and even more uniquely, futures trading to speculate on future price movements of cryptocurrencies. A lot of DEXs do not offer futures trading, And if you want to get into futures trading, then make sure to check out the Discord link below, because my team is sending out trades every single day into the Discord, and we're getting wins like this that you can see here right now on the screen. So make sure to join up so you can get all of our trades every single day. Now let's compare Cake to Jupiter. Cake was one of the largest dexes in the previous bull run. You can see here Jup has a trading volume, or last month it had a trading volume of 35 billion, whereas Cake only had a trading volume of around 14 billion in the same time period. So Jup is already over 2.5 times bigger than Cake this bull run. Now their community is also very, very strong. They have nearly 400,000 followers on their Twitter with decent interactions on all of their posts. Jup did an airdrop when it launched, which caused an initial dip before the huge rally. This is actually quite good because it means that all the early investors that wanted to sell have already sold, and now it can perform much better and to the best of its ability. Now let's take a quick look at the chart of Jup. So you can see here Jup today, at the time of recording, is currently spiking up and attempting to break the 0.5 level here on the fib. Now the best time I'd be looking to buy Jup is going to be at around this box where me and my team were buying during the dips, which is sub $1, around 97 to around 80 cents. Now again, we might not get here by the time this video goes out, so I'd be looking to get in at current market price. I mean, anything under below this 0.5 level is quite good. If you can get in at sub $1, it's amazing, because the price targets that we have for Jup are out of this world. We have $10 for Jup, which is around a 10x from now, and also $15 for Jup. Now these are quite conservative price targets, especially considering what Cake did last bull run. However, I'm going to keep it quite conservative for you guys because I don't want to give overly optimistic price targets and then not hit them at all. If you do want to take a look at the charts yourselves and see for yourself, where you think Jup could go, then feel free to do so, and feel free to set higher price targets. And again, it's not mandatory that you try to sell 100% of your holdings at each of these levels. What you can do is sell partial holdings, so like 50% here and the final remaining 50% here. It'll just allow you to get a slightly better exit, and you can see here Jup already pumping through this 0.5 level. But yeah, these are currently good levels to buy in at, even at around the 0.5 level where we have some resistance right here. And don't feel scared if you get into slight drawdown, and if we start to consolidate slightly here, there is still time in this bull run for Jupiter to rally. Now the next coin, and the final coin that is high risk, is coin free with $200 that we're going to invest, and that coin is Stacks, or STX, which is in the layer 2 narrative. It is a standout project for this bull run for several reasons. First, it integrates directly with Bitcoin, enabling smart contracts and dApps without altering Bitcoin's original protocol. This not only leverages Bitcoin security, but also opens up new functionalities tied to the most trusted blockchain. Stacks introduces the proof of transfer, or POX, consensus mechanism. This approach not only secures the network by linking it to Bitcoin, but also allows participants to earn Bitcoin by stacking their STX tokens. This feature is especially attractive during a bull run, as it offers both potential for STX price appreciation and the ability to earn passive Bitcoin rewards. Here's a bit on how it works and the chart that we have here. So a miner spends Bitcoin to participate in the network. This action is part of the mining process on the Stacks blockchain. The miner who wins a block by being selected through the POX consensus receives newly minted Stacks tokens as a reward, along with transaction fees collected from the network operations. The Bitcoin spent by the miners is not lost. Instead, it is transferred to the STX holders who participate in the network by locking their STX tokens. This mechanism is central to POX and distinguishes Stacks from other blockchains by integrating Bitcoin security and liquidity directly. Stackers lock their STX tokens to support the network's consensus. By locking their tokens, they become eligible to receive these Bitcoin rewards. The diagram shows two stackers as examples. Each stacker locks their STX, and in return they receive BTC from their miners. This reward mechanism incentivizes the holding and locking of STX, thus securing the network. The Stacks ecosystem is rapidly expanding, with developers flocking to build a range of applications on the platform, from financial tools like decentralized exchanges to creative platforms for NFTs. The diversity of projects enhances user engagement and drives the platform's growth. But the most important point, in my opinion, is that Stacks is the first token to have token offering officially qualified by the SEC, which is a significant milestone that adds a unique layer of credibility and trust. This SEC qualification not only ensures compliance with the US securities law, but also marks Stacks as the first project in history in bridging the gap between decentralized finance and recognized financial regulation. Institutions will typically prioritize security compliance and the long-term viability of their investment. With Stacks' SEC qualified offering, these investors can now participate with a much higher degree of confidence. More so, this level of regulatory assurance can lead to a much higher inflow of capital compared to the other layer 2 solutions. Now let's take a look at the Stacks analysis that we have and where we want to be buying and also where we want to be selling. So right now Stacks is in my buy zone. It is quite high up from previous levels, however it is still consolidating quite nicely at the current market price here at around $2.40. So what I'd be looking to do is buy in with the $200 somewhere around here. First resistance level is at around $3, but we won't be selling anywhere near here. Our targets are way higher. Our targets start off at around $20, which is nearly a 10x from the current market price. The next target is going to be at around $25. However, again, you don't have to use my targets. My targets are quite conservative, just so you guys are able to get a nice understanding of the projects and where I think they're going. If you are looking to get that 1k to 30k mark, look at $40-50 as a price target. Stacks is a very good project. It's not the most fun, engaging projects like AI, gaming, NFTs, metaverses, but it's a necessary project that we need in the crypto space. It's one of those boring projects, like for example an insurance company, but it's mandatory that we have them. And again, it's usually these sort of boring projects that are the ones that will do the best. We'll see AI, do a 10, 20x, but then it'll instantly dump. These projects like Stacks are here to stay much longer. They might have a slow and gradual incline, whereas AI might do a 10, 20, 50x instantly. However, with a slow gradual incline, you're able to take your time, be patient, sell, analyze the market much easier because you're not having to rush, and so on and so forth. So that is my predictions on Stacks. Now the fourth coin that we have, and the first coin that is lower risk, is going to be none other than Fetch. Fetch AI is this great blockchain platform that blends artificial intelligence with blockchain tech. It's all about creating these smart agents that can do tasks in areas like transportation, supply chains, and healthcare on their own. These agents are designed to make things way more efficient and could save a lot of money by automating and optimizing various processes. It's kind of like having a bunch of mini robots all over the place, making things smoother and faster in the background. Now, Fetch AI has this really cool feature called autonomous economic agents, but I promise you, it's way simpler than how it sounds. They're also known as AEAs. They're basically smart agents running on its blockchain. These agents are pretty self-sufficient. They can talk to each other, they can handle tasks on their own, and they can even manage transactions without needing us to step in. This all comes from the AI technology built on their platform, which lets these agents get smarter and adapt over time. Now I know what you're thinking. Fetch is already a top 50 coin by market cap. It can't do any huge multiplier. Well, that's where you're probably wrong. You see, due to the project itself being in the AI narrative, and the AI narrative is looking to be the leading narrative for this bull run, it is also one of the largest AI coins with a very innovative project. That is why I see it being such a huge coin in this run, which we'll see from my analysis. So you can see here, Fetch has already had a big rally up. It is still only trading at around $2.50 though. Main buy box that I have here is at around $1.60 to around $2. Anything under $2 is quite a good buy on Fetch. However, right now it is quite high up. It is still a good buy in this current market price area. It's consolidating right now from the peak at around $3.50 this year, which is still around a 30 to 50% move to get back to this high. So the recommended plan that I would have is buying in somewhere around here. And if you do have more capital to invest, if we do go into some drawdown and get to under $2, then DCA in. If you don't, then just hold through that drawdown and wait for the AI narrative to pick back up. The targets I have is the first main resistance level again is at around $3.50. Once we break above, we enter price discovery. And so the targets that I will have are going to be rather high. First target is at around $16, which is nearly a 8x. Second target is around $24. Now, again, these targets aren't mandatorily set. You can raise them, you can lower them, depending on your targets and your goals for this bull run. Again, Fetch is a great project. It's one of the biggest AI coins in this bull run. My moonshot target is going to be at around $40, which is nearly a 20x if you get in at around $2. So $300 invested at 20x is going to be 6k. And if you're able to get some more money in, then again, it's much better. Now the next and final coin that I have is coin number 5, and we've talked about this coin before. It is none other than Render. Render is a coin I've already made a video on, and it is the final coin on the list. It's a decentralized platform that uses blockchain technology to enable distributed GPU rendering. It essentially connects people who need a GPU for tasks like 3D rendering, virtual reality, and AI applications with those who have idle GPU resources to offer. The system allows for efficient and cost-effective GPU usage, tapping into a global network of available computing power. So Render Network is kind of a big deal in the tech and entertainment worlds. They've got their rendering tech, Octane Render, running on millions of Apple devices, which is pretty wild when you think about it. Plus, they're not just working with Apple, they've teamed up with heavy hitters like Google, Amazon, and Microsoft also. And get this, even the big movie and streaming guys like Warner Brothers and Netflix are on board. They've used Octane Render for some of their massive productions. It's like the Render Network is everywhere in the tech and entertainment game. Render Network isn't just in big movies and streaming, they're also making waves in the gaming and design industries. They've hooked up their services with some of the most popular game engines out there, Unity and Unreal Engine, which are huge names in gaming development. On top of that, Render Network is connected with the leading 3D modeling and animation softwares like Houdini, Blender, and Cinema 4D. It's a huge deal for anyone in animation and graphic design because it means that they can use Render's tech to bring their most complex ideas to life with more ease and way less expense. So Render over here again has had quite a big run up, but don't be afraid of that. Instead, look at the possibilities that Render has. So I'd be looking to buy Render in this blue box, anywhere from $7 to $8.30. You can see here it broke past this slight resistance level right here. But again, if you're able to get in somewhere around this $8 mark, then that is absolutely great. If not, again, get in at the current market price. Because this little move here is not much, won't give much of an effect, because of how big our targets are for Render. So the main resistance level that we have for Render is the high that we had here, which is at around $13.68, $13.70. Once we break above, we enter price discovery again for Render. Then the targets begin. The first target we have is around $40 for Render. So a 4x, over a 4x from the current market price. The second target that we have is $80 for Render. Like I talked about in the previous video, I'm viewing Render sort of as my Solana investment back in 2021. I got in at a similar price on Solana at around $8 to $12 I was buying, and again Solana now is trading at way over $150. It even peaked like over $200, which is a 20x. So when everyone back then was saying Solana hasn't got much more room to grow because it's already quite a highly priced coin, it's got quite a high market cap, you know, it's in the top 50, I wasn't listening. I was just buying. I liked the project, I liked the narrative, and it ended up paying off. So Render is in a similar boat to Solana as it was for me in 2021. So I'd be buying somewhere around here. Again, me and my team from the Discord have bought in way earlier. We were buying during the bear market phase around here. So we've already nearly 10x'd our investment on Render. But we're still holding some of our coins, you know, for the massive runs. You know, if it goes to $40, we would have done nearly a 40x on our investment. And again, $80, nearly an 80x on our investment. So that's what I'd be looking at for Render. Now, if you enjoyed the video, make sure to like and subscribe. Also, make sure to comment below your favorite crypto from the video. If you want more coins that I'm buying and holding for huge gains, then check out the Discord linked below. You'll also get access to all of my team's trades that they are taking daily. Thank you all for watching, and I will see you all in the next video. Goodbye, guys.